Yeah, so I'm Luke Alexander, President and CEO of Newcore Gold. I spent the first 15 years of my career on the investment banking side of the business, 12 years in London advising ASX, TSX, London-listed companies with assets around the world. And I really learned three things during that whole experience. To make a great company, you need three key things. You need to have a great asset, a proven management team, and you need strong support from the capital markets and the investment banking community. And we're very fortunate at Newcore to have all three of these things. We're advancing a district scale exploration project in Ghana, the Enchi project, fundamentally underpinned by a very robust PEA and sitting on 1.4 million ounces of 43-101 inferred resource. Let's start with the team and the capital market support. You heard a little bit about me. We've got a very strong board with a proven track record of making shareholders a lot of money, but also importantly, we're very well aligned with shareholders through our 27% ownership in the business. So we ultimately think as shareholders first. Secondly, institutional backing. I think it's rare for a company of our size to see so many tier one institutions on the shareholder list. And I think that really speaks to the district scale asset as well as the team involved. Lastly, very strong support from the capital markets. We currently have 5 investment banks out of Toronto covering us from a research perspective, $1.45 to $2 targets. If we look at where we're trading today, we're trading at about $20 to $25 per ounce in the ground. And if you look at our PEA with an NPV of 300 million, you're looking at us trading at about 0.15 times NPV. So again, very attractive metrics to get involved in. Let's look at the asset. We've got the Enchi project, as I mentioned. We are in elephant country here. Great neighbors along trend from us. 50 kilometers to the north, you've got Kinross's Chirano mine. Sits at a historical endowment of 5.5 million ounces. To the north of that, the Bibiani deposit, which is coming back into production, sitting at a historical endowment of 6.5. And then one of Newmont's 2 producing mines in country, the Ahafo mine. They're spending another $800 million on this project to take them to 20% of global production coming from Ghana. So I think that speaks to the quality of the country that we're operating in. With our 90,000 meter program, which is the largest ever drill program on the property, we wanted to accomplish 4 things. We wanted to expand the existing resource at all of our known deposits. So we've been stepping out along strike and meaningfully expanding that existing resource area. We also wanted to go back to previously drill tested areas, make more discoveries and turn those into resources. Quachikrum would be the best example of that. With our first 20,000 meters, we were able to move it into the resource category. Third thing, we wanted to make some new discoveries, and we're very excited to have announced 3 new discoveries this year at our project. And lastly, and I'll get into this in a little bit more detail, we also wanted to start showing the high grade potential at depth. Historically, this project, the deepest hole ever was only down to 150 meters, and we've allocated about 15,000 meters to some deeper drilling. Comparing our project to the Chirano mine, again, sits on the same CFW Bibiani Shear as us, 50 kilometers to the north. We're looking at a long section here of our project and comparing it to Chirano. We've then superimposed the depth of the oxides, which we've only gone down to, or our pits only go down to about an average depth of 63 meters. And we've started to have some very good success with the deeper drilling. Looking here at this hole number 45, and I'll just try to blow that up a little bit more for you. This hole number 45, as we got down to about 175 meters below surface, we've hit 5.4 grams over 9 meters. Sitting 500 meters to the south on the same structure that you can see up there, we've hit 4.5 grams over 13 meters, 7.4 grams over 8 meters. This starts to show the high grade underground potential of our project to obviously complement all the oxides that we've got sitting near surface. If I now pull you back from all of that and show you a a long section, and if everybody squints as hard as they can, you'll probably be able to see some of this, but 5.8 grams over 7 meters, 5.6 over 8, 5.4 over 9, almost 5 grams over 8 meters. So we can now start to talk with confidence that we've hit one of these high-grade structures that's plunging at depth and shows the potential for that underground. Importantly, we've still only drilled down to about 250 to 300 meters. So as experienced investors in this room, you'll recognize that that still is relatively shallow. Looking 500 meters to the south, we've hit, again, 3.2 over 9, 4.5 over 13. Within that, 7.4 grams over almost 8 meters, 3.5 over 9, 6 over 6 meters. We think we've got another one of these high-grade plunging chutes that will be able to do a bunch of follow-up drilling and expand. One of the big questions for us is what potentially sits in between here. What you're seeing on the screen is every single hole that's ever been drilled here, and it's pretty clear to see there's a lack of drilling in that area in between those two zones. So maybe just to recap, company's fundamentally underpinned by a very robust PEA. At $18.50, we're looking at a $302 million NPV, currently trading at about $20, $25 per ounce in the ground. That obviously doesn't include any of the additional 70,000 meters of drilling that we're completing as part of this 90,000 meter drill program. Management and directors own 27% of the business, so we're truly aligned with all of our investors. Very strong support from the capital markets, as well as deep-pocketed, long-term focused institutional investors who truly see the district scale opportunity that we've got at our Enchi project, as well as all the upside that will come from it. Thank you.
Who wants to judge first? Any questions? Yeah.
Great presentation.
Thanks, Willem.
And great slides.
Thank you.
Intriguing what's deeper to be found. When will you drill the middle part, the missing part?
Yeah, so we'll look to drill that probably later this year. We have focused on deeper drilling at other areas on our project as well. We've seen some nice smoke from some of those areas, so those will also warrant some follow-up drilling. So yeah, later this year is when we'll focus on drilling that area.
Maybe I missed it, but how many meters will you drill the next 12 months or season?
So we've got about 10,000 meters left on our 90,000 meter drill program. We're looking to get a resource updated, completed in Q4 of this year. And then based on that, we'll obviously reevaluate as to whether we start moving towards a PFS or drill maybe another 50 to 100,000 meters to continue to expand the overall inferred resource.
Okay, thanks.
Thanks, Luke. That was great. Really good presentation. We had the pleasure of meeting you yesterday. So just a quick question. How much cash do you guys have? Is it enough to get you through this last 10,000 meters? When will you be going back to raise additional funds? Obviously, you've got a really good shareholder base and investor base.
So we ended the year with $6 million of cash. We're heading into the rainy season, so we've ramped down our exploration spend. So we're currently burning about $500,000 a month. In terms of the way we laid out our budget last year on the back of raising $11.5 million, is we wanted to be able to complete our entire 90,000 meter drill program. We wanted to be able to get a resource update done, and we obviously wanted to have enough cash to run the business right through this year and into 2023. So we're funded for all of that work. As major shareholders of the business, again, our view is that where we're going to create the most value for you and other shareholders is by getting as many meters into the ground as possible. So with that in mind, we do run a very low G&A. We're about $1.5 million Canadian a year from a G&A perspective. So we can, run things very efficiently from that perspective. So fully funded into 2023.
Great, thanks. And just another quick question. Can you, I didn't see it in the slides, but comment on your ESG strategy, your work with the communities. How's that all evolving?
Yeah, so at a high level from an ESG perspective, our view is that when all stakeholders benefit in a project, that's ultimately the best way to push it forward. One of the things that we're very fortunate is that we have a long tenure of employees who've worked on our project. Dan Wilson, he's our country manager. He's worked on our project on and off for 25 years. He's been back directly with us for the past 12 years. And all of our ESG personnel come from the town of Enchi, which has got about 15,000 people. So they're deep rooted in the community. And as a result, from an ESG perspective, we've got a long-term relationships, but things like building schools and sanitary facilities, offering jobs to the locals first from a casual labor perspective, those are all things that we do and will continue to do because our views that's the best way to push a project forward.
Great, thank you.
Okay, Peter, did you have anything?
First of all, you're running prospecting permits over all this, correct? And what's the life of them?
So we just renewed our drill licenses last year, and those will run for 3 years. We've done enough work on the project at this stage that obviously, assuming we continue to drill and explore across the project, I mean, we've done way more than what the kind of commitment is to keep those, as you can imagine, with the amount of drilling we've been doing. But we'll be able to continue to renew those licenses as we move forward.
And then what's the process and the timeline usually to get to a mining license?
I mean, one of the examples I'd use, which I think potentially best illustrates that, is what Asante is doing to the north of us. They've recently acquired the Bibiani mine, which is, I think they closed that in August of last year. And anyone who met with them at this conference or heard the story, they're going to bring that back into production in Q3 of this year. So about an 8 or 9 month period to take it from brownfield to production. Reason I use that as an example is I think if you looked at a similar project in North America or other parts of the world, you'd probably be looking at a 5 to 10 year process to do the same thing. The Ghanaian government is hugely motivated to make sure that these projects go into production. And as a result, they work really closely with companies to push those forwards. A couple other small things from a Ghanaian government perspective that I think are interesting. They've actually launched a what they call a hub. So Ghana wants to act as a mining hub for all of West Africa. They've got obviously the largest production in Africa at 5 million ounces. So with that, you get a huge amount of mining services companies in country. There's 2 universities in country, so they're really looking at pushing the industry forward. The Ghanaian government, through a group called MIF, has recently launched a $200 million fund where they're investing directly into projects. They put $20 million into Asante, but they're also looking to institutionalize the small-scale mining in country, and they're going to be actively investing in a lot of those projects. So those are just a couple of examples that I think are, I guess, really highlight, the government's view in terms of the mining sector, how important it is for the economy, the tax base, and how they want to see it really grow.
And then what's the tax royalty structure for if you went into production?
So the Ghanaian government has a 10% carried interest across all projects in Ghana. They've also got a 5% royalty across all projects in Ghana as well, and a 35% tax is the tax rate in Ghana.
Thank you, Luke.
Thanks.